Welcome, I'm Chaim Siegel with Elazar Advisors. It's July 3rd, and we wanted to do a morning call for you. We're going to start. We think it's important that everybody has a medium to longer term perspective. So the first step, this is the Dow over the last 100 years or so, and you see that you've had two major 16, 17-year-old cycles going up. We think we could potentially be in one of these up cycles. We're about 8 years up, and which would mean we're roughly have 9 years to go. One confirmation is that here you had a breakout, here you had a breakout, and in a shorter time we had a breakout, implying maybe this could be a stronger move this time. This is the S&P 500. We had a medium-term call that the S&P should go up from here on May 22nd, and you see that all the way the market has kept to a beautiful uptrend. And no matter what the news was or the scares were, I think this was Comey, this was just recently, for no reason, not much reason, and along the way, that the market has held this very consistent uptrend. We think it's going to continue. And one more shorter term, July 4th ends up being a low point for the year. So if we're still in an uptrend, which we're very bullish about, that we think it should restart after everybody gets back from a nice July 4th long holiday weekend. Here we have gold. Really, this is GLD. This is the ETF for gold. And what you see here is that you had an uptrend, but it's threatening, or really it's broken this uptrend, but not decisively. And we expect it now. We just had a shorter term sell signal today, and we think that it's going to break this. We have a lot of fundamental factors that are working against gold. You have low inflation. You also have the weak PCE price indicator on Friday, also confirming that it's very low inflation. You have a Fed that wants to raise rates and reduce their bond portfolio. So in the face of low inflation, you also have a Fed that's working to stamp out inflation even further. This is bad for gold. Plus, also negative for gold, you have, we think, the economy is picking up, and you also have earnings picking up. So we expect that while this is just a technical warning sign, we think fundamentals are going to break this and send gold lower. Here we have TLT. This is the ETF for the 20-year Treasury. This is bonds. And you see it's been in a beautiful uptrend. More recently, we had a little scare. We're actually bearish on bonds medium term. We had a little scare that it went above the uptrend. It could have been an upside breakout, but it quickly came back. So that was an upside breakout failure. That's actually a confirmation that maybe it's not such a strong trend because it immediately came back. We think the reason it's an uptrend is because a lot of baby boomers are in bonds and safe assets, and they're a huge part of the population, so they're not going to give up so easily. They're not going to sell their bonds on news. Also, a lot of people are pretty bearish going into the back half. They may not believe that the economy is going to continue to pick up, but the companies we speak to and looking at the GDP numbers, the jobless claims numbers are still very low. It says that we should have a strong back half. We're very bullish, and we think actually the real exciting story for the stock market could be this, that normally when bonds go down, you have the stocks also going down. This time we think it could incite a sector rotation to go where everybody starts losing money. If people start losing money on their safe assets, they might shift into more risky assets like equities and send equities up, especially if the economy is staying strong. Here you have the dollar. This is the ETF UUP. You see it's been in a downtrend, and more recently it's taken a spill, we think because of interpretations of what the ECB President Mario Draghi was thought to have said when he spoke last week. But it turns out Reuters had a report that maybe he didn't have such hawkish terms as was originally thought. Nonetheless, the dollar was weak here. We're actually turning bullish fundamentally on the dollar, but we wouldn't buy it here. We're not trying to catch falling knives. But there's a chance that it could start to bottom, but we don't want to play it. But fundamentally, The economy is picking up. That's good. Inflation staying low. Inflation staying low is very good for a currency. And we think the political landscape is getting better. And it looks like President Trump in the U.S. is having a little bit more momentum to get some things passed. And maybe that'll build some momentum that'll have some political support on what he wants to do. We wish you a lot of luck in trading today and investing and a lot of profits, and we thank you for joining us.